we're going to look at a few stocks today, and we'll start, in the travel industry and make our way to new holdings. Before we jump in there, I wanted to just kind of recap. We had the election last week, and it's amazing how sentiment has really gotten positive, and I think the market just rallied big time on Wednesday. It kept rallying throughout the week, and now the Russell is doing really, really well. If you look at the 1 year, it's up 40%. So small caps are really working. NASDAQ's working. The Dow is working. It just seems like if you own assets going forward, you're going to be glad you did so, because I think the economy is going to do well. Interest rates are going to drop. And I think the sentiment is, for individuals and investors to buy into equities as well as other assets. Real estate might do better now. And other, go ahead, Nkaider.
Which relates to what you are saying. I don't know if we talked about that. This famous article by this bank that Morgan Stanley, I believe, or other one, that they predict that the market will grow 3% per annum in the next 10 years. Did you hear about that?
No.
Okay. So with it.
It should expand. Now, the trick to it is we've got an expensive market, right? I don't know that a lot of people are going to argue, it's, it's a lot of deals to be taken advantage of out there. The NASDAQ's really, really rolling. Technology, semiconductor are really, really expensive. And if you look at PEs, they're just pretty darn high. And investors keep buying into them. I'll give you an example. We had AppLovin, which is a really good company. It's a really, really good company. They're up 562%. Look what they did this past week. Just in 1 day, literally, in 2 days, up 72%. And this is no longer a small cap. This is a substantial cap, almost $97 billion. So this is interesting. It's kind of fun to watch. At the same time, it does cause me to think, man, are we going into the euphoria phase of usually when stock markets crash? You get into a euphoric stage when everybody's like, oh man, I'm going to buy stocks no matter what. And AppLovin kind of is like just going crazy. I looked at this company closely. It's a really nice company. I think they have software, technology, applications for the times, which help businesses spend their money attracting their best customers to use their mobile apps. So it could be, let's say Chase is trying to attract more customers to use their online banking. They could use AppLovin to attract more customers and then keep them. Really, really great business model. Just, the euphoria is kind of entering the market. So finding really good deals is kind of tough right now. So what I thought I'd put out there is just a couple of ideas of where there might be good investments. And I think that the Russell small caps, it did not keep up with the S&P. So I think that's going to be a place where there might be some good opportunity. So small caps, if we look at the S&P compared to the Russell did not keep up with the S&P. So it's not as expensive. PEs look good. Now with lower interest rates, it's going to be a place where small companies are going to potentially do really well. The other thing it's going to increase is mergers and acquisitions and IPOs. And that's small cap territory. So I'm looking in small caps to try to find maybe a couple more really good companies. And we'll be putting a lot of my research into that area for probably the remainder of November, trying to find a couple good companies and doubling down on companies I already own that are small caps that are set to really do well. I have seen some of my small caps do really, really well. Catalyst had a great week. And Catalyst is a pharmaceutical / biotech company. And they are a 2.8 billion market cap company. And over the past year, they're up 86%. They had an earnings and it really, really did, performed well after the earnings. This is one of the stocks that I own. And I think I'm going to keep buying shares into Catalyst as well as United Therapeutics. So this is the space that I think is going to do well. Not necessarily pharmaceutical. I'm just saying small caps, 2.8 billion in market cap and kind of around that I would say even under $1 billion, right? 500 million to 20 billion range. I think there's some pretty good little companies in there. The PE on this one's getting a little out of hand, 44. The forward PE is going to be better. And this is a product of the stock price going up so much. So Catalyst has been a good winner. And I think other examples are out there of small caps really taking off. We'll see how the big caps do. It'll be really interesting to see how the mega caps do. I know Apple hasn't been doing all that great. I think it's kind of keeping its stock price. If you look at the last month, it's down 0.91, right? And you look at that compared to, I'm not going to compare it to NVIDIA because it's been booming, but maybe I compare Apple to Microsoft. And they both are doing okay. Well, Apple's down over the last month. Microsoft's up a little bit, 1.6. So I guess Microsoft's doing a little bit better. But we'll see how the major caps do. Maybe, the big caps for the last 2 years have done great. But maybe it's kind of like, okay, the investors are overbought in those zones. Like Warren Buffett, Berkshire Hathaway is selling off more Apple stock. It'll be interesting to see if money gets moved from massive caps over to small caps. So that'll be interesting to see play out. So in addition to small caps, I'm spending some time looking at investments in Mexico and Latin America. In Mexico specifically, because with Donald Trump in office, I think there'll be greater tension with China, and that rivalry will come up again. And I think the nearshoring opportunity is going to be, pretty big for U.S. companies, for international companies that want to sell into the United States. So we'll see how Mexico benefits there. Their economy has been expanding quite well for probably the last 5 years. They've been doing really well. And I think that growth is going to continue. So I'm going to try to find a couple of investments down there. It's been tough. I've tried before. I just don't get comfortable around it. Just doesn't feel like I understand the companies as well as I do American companies. And I would say in some cases, the free cash flow that they produce is not as good as things I'm finding in the United States. And this is probably a year and a half ago when I really dug deep into Mexican stocks. But I'm going to take another shot at it and see if I can find a stock or two that look really interesting, just to diversify down in Mexico and Latin America. As we head into, a Trump administration, the one sector that really rallied was financials. It did really well because it's expected the big banks are going to really benefit. So as we look at financials and we look at, and I don't know if I can get let's see here. See if I can look at the 5-day. I don't think I can. So, but financials really ripped up, especially on Wednesday. We saw, I think JP Morgan's a good example. This is a big cap company, 667. And I think if JP Morgan's really doing well, you better believe that like smaller banks are going to do great, or financial services companies are really going to do great, because a move at the JP Morgan level, as well as other major banks, really signals that the banks are going to do far better, because there's going to be less regulation on, the holdings they have to have, the reserves, and lower interest rates. So I think there's going to be more activity for banks to take advantage of. And that extends out to other financial services companies as well. You think about like the buy now, pay later companies, they're probably going to do well. Just across the board, I think the theme is if you're in finance, you're going to do well because the new administration is going to try to really drive growth. So I'm going to be doubling down on some of my financial stocks. I already have a pretty good, list of financial stocks. I don't think I have to look very far, and I just have to keep doubling down. The crypto space has also just been booming. Pretty darn amazing that crypto, the Bitcoin hit $80,000 per coin for the first time in its history. And it's now crypto's ads have been around for a long time, so you can't compare it to like 50 years ago, but you can compare, you can look at the last 16 years. We've had, I guess in that period, I'm going to call it 3 elections. And on each election, Bitcoin has rallied strong, and it's doing that again. If you look at, I guess we can look at the 5-day. It's gone up from, call it 74,000 a coin up to 80,000 a coin. And it may continue because the last election we had, it rallied over 300%. The election before that, it rallied tremendously, like 2,300%. That's when the coins were far less expensive. Now that they're more expensive, it's harder for it to really rip up. But I'm just looking at it, seeing that, hey, investors are going into riskier assets, And they also expect that there's going to be a lot of inflation because a lot of things that are expected will drive up inflation. So Bitcoin has been on a tear. I don't know that I'm going to put any more money in crypto. I've got some Bitcoins, I've got Ethereum, got Coinbase, and I'm not going to put any more money into it, but I'm just going to let it ride. I was actually thinking of selling some of my cryptocurrency early in 2025. Right now, I don't want to take any more gains because I've already got a tax liability, and I'd like to just wait until January. And if I do want to sell some coins, I'll sell them then. Or if I want to, I don't know that I'm going to sell Coinbase, but maybe might sell some shares as well. And maybe other investors are thinking along those lines. All right, so go ahead, Enkiter.
So it's make me thinking or worrying that we will see a big sell-off in January. Because it's funny, though my money is little versus the market, but I was thinking the same as you. I have few stocks that I want to sell, and they are in profit, and I do not want to sell it this year. So I'm saying, who knows? Maybe there are other tens of millions that are saying the same, because many have profits in all kinds of stocks, and all of them will go and sell in January.
Yeah, and I mean the one that makes me pause is Warren Buffett. He's carrying so much cash. You're like that. He really knows markets, right? So we'll see. I still think that we may have a short-term sell-off early in next year because people are thinking like myself, hey, I'd like to sell a few things. Like I want to sell some of my Chevron because I just own too much of it. Kind of lean that down, maybe diversify into a different energy company. I'm still going to own Chevron, but I'm going to go from, I think I own 105,000 of it or something, maybe bring it down to like 80,000 and take that capital and put it into something else. So that type of behavior, if we see it early in 2025, maybe it's a short-term dip, but I think 2025 is going to be a good year. There's just too many things that are going to be pushing things up. Lower interest rates. We have an administration that really wants to grow. You have, I think sentiment is positive, meaning companies are like, oh, okay, we're going to grow for the next 4 years. So we're going to invest more, where they're going to put capital into their businesses. So there's going to be more bullish thinking in general as business leaders operate their companies. So with that, I still think 2025 is going to be positive. But if we had a January dip, that wouldn't surprise me. And it would be mainly because people are rebalancing their portfolios, which is what I'm trying to do. All right, so let's take a look at TransDigm. This is a company that designs, produces, supplies aircraft components in the United States and internationally. The power and control segment offers mechanical, mechanical actuators and controls, ignition systems, engine technology, specialized pumps, valves, power conditioning devices, specialized AC/DC, electric motors, generators, batteries, chargers. Okay. All right. Looks interesting. It is a $76 billion market cap company. It's done really well, 51%. It's done really well over the 5-year. Excellent stock. Man, look at this dividend. This is a great investment from an income perspective and an appreciation perspective. So excellent. As we look at the company, the growth has been right there with the travel industry. When did they announce their earnings? On November 7th. So that just passed. This was Thursday. So they announced on Thursday. So their growth is 18%, doing really well. 2.186 billion in revenue. That looks really good. Okay. Looking at the annual. So I'm going to look at a couple of things. So earnings per share is 25. So this is an industrial stock. They're supplying the aerospace industry. They are growing really well. 25 is very reasonable. Now, is the aerospace industry going to sustain itself at the current levels? Potentially. Yeah, I think we're going to be growing well. So I think travel is going to continue to be high. The only thought I have is, at what point do the airlines bought all the airplanes they need? But then there's spare parts, right? So these guys are probably selling spare parts. So that's good. So I think their business is going to do well. I can't see it not doing well for the next 2 years. So I think their business is going to continue to do well. Free cash flow. Okay. So free cash flow is $32.53 per share. Gross margin's very good at 58.84%, which is an industrial stock that's very good. So if you got $32.53 per share, and their share price is $13.50. $13.50. And I'll do a quick spreadsheet. So it's 2.4% cash flow yield. Not great. It's the stock price has really gone up. So this is a really high quality company. It's now a mid cap stock. It doesn't drive a lot of cash flow. It is growing its cash flow very nicely. So even if I grew that cash flow substantially, and let's say I'm going to multiply this times 30, I'd get to 55 billion in market cap that free cash flow could support, and that's well below the market cap. So it is an expensive stock. It's done really, really well. The reason why it's expensive is the stock price has gone up substantially. So it looks really good that, investors that bought it did really, really well. I just think buying it today as a new investor in TransDigm is a little risky. I think the stock is looking expensive. Analysts think, based on earnings per share, that it's still discounted a bit, and there's 18 analysts covering it. They still think it could go higher. And the forecast for cash flow is looking at 2025. It's expected to grow 16%, up to $39.87 per share. And it's going to grow. But see, here's where it drops off. I guess the forecast is everybody would have bought all the airplanes they need. Now you're dealing with spare part business, maybe lower volumes. So this is where, the stock might continue to work for maybe a year, but at some point it may start to fall because the expectation is that it's going to slow down. Once the growth slows down, investors will not treat it like a growth stock. It'll treat it more like a value stock. So, but for the time being, it's a quality stock. I just think it's really expensive, and I wouldn't entertain an investment because it's too expensive. So, very high quality company. What do you think, Kiter?
Well, I'm following what you're saying. Yes, should be careful. Actually, I don't mind it. As I said, it's not a huge bot what I did, like 8K. And if it will go down, I don't mind if it will go down and I can add in substantial lower price. But
yeah, these guys, yeah. When you have this type of consistent performance, it seems like these guys really know what they're doing. They have the right products. They have the right customers. Things are really working.
I believe that they have kind of a mode, which is also one of the reasons for the high price. But I think that I'm following what you are saying and the calculation. Like the cash flow is not huge or not big enough per the stock price. But again, from my side, it's the industry which is driving. Well, how it will be look in 2 years? Well, that's what analysts are saying. I know that analysts are changing their minds every quarter. So, like, again, I don't want to sound too criticizing someone, but I'm taking the analyst's opinion with a grain of salt, big grain.
Mm-hmm.
So we'll see.
What I would say is, can we find companies that look like TransDigm, different companies that are they're maybe in this chart here, they're maybe like here, they're about to take off. So this is a great example of a very high quality company. These guys deserve the stock price. They've done a lot of the right things. It's quality. Can I find another company that's in the aerospace industry that's maybe 20 billion in market cap and is about to start doubling in value? That'd be the challenge, which could be quite rewarding.
Yeah.
Yep. All right, good. So that was a good one. Let's move on to Bruker. So I think this is a great idea. I like where your head's at, by the way. So these guys develop, manufacturers, and distributes scientific instruments. Okay. And then analytical and diagnosis solutions in the United States. So these guys are selling equipment that life sciences companies, basically drug exploration companies, those types of science-based companies are buying. When you have a change in sentiment, like, more positive, hey, the economy is going to grow. Hey, investment is really high and really positive. More equipment's going to be bought. More capital is going to be invested. So I like that this is kind of a play that's going to work because the sentiment has changed quite a bit. Over the past year, this is down 0.91%. Last 5 years, it's done 22.57%. Okay. So I'm going to study a couple of things. Margins is going to be really important here. Revenue growth rate. Because if these guys are high margin, I'm interested. Because eventually, if they can grow and they have a high margin, there's no way around it. It's going to create a lot of value. If these guys have low margins and low growth or just, small growth, I probably wouldn't be interested. So let's take a look. Right now, they're a PE of 28 for the current year, but next year is going to be 22.39. Analysts think it's discounted. All right. So from a growth perspective, good growth, nice consistent year-over-year growth, very good. It's a $3.2 billion company. Okay. Let's take a look at those margins. So gross margins, 49.95%. That's okay. That's good. Not great, but it's good. Be nice if it was 70. So 50% is good. Free cash flow is 156 million. It hasn't shown like a nice upward chart, even though they've been growing. Why isn't their free cash flow showing an upward slope? That's interesting. So if I round it up to 200 million, it's a reasonable grower at 15%. So if I were to go 20 or 30 times, I'd get to 2 billion, 3 billion in market cap based on free cash flow. So it's kind of, there's a big difference between the cash flow it generates and the market cap. The value that I would get if I look at cash flow is maybe 2 billion, 3 billion. So that's pretty far from 8.75 billion. The earnings per share is probably driving a better valuation. 11 analysts cover it. They think it's highly discounted. The earnings per share is expected to grow nicely here. And the PE will drop down in the future. That looks good. So this looks good, but the question, I guess the piece that I'm not sold on, right, is their gross margins are not great. They're okay, 50%. And their free cash flow is really low for the size company. It should be higher, like 500 million, 700 million, because at 156, if I just round up to 200 million and divide that by the 8.75, again, 2.2%, 2.3% free cash flow yield. You can do better with treasuries, and that's very low risk. So it's like, the risk-free rate is doing better than this company can produce free cash flow. So why are they not producing more free cash flow? Is it that they're investing a lot in their business? Do you have a comment, Enkider?
Yeah. So from what I read and the research that I followed, they were doing like they were in an acquisition spree, and they acquired multiple like tuck-in or something like tuck-in acquisitions that supposed to be accretive to their cash flow and to the revenue in the coming years. So I understand what you are saying, but here's the problem: when all these numbers will be in line, like we want, all the startups in place, then it will look like TransDigm. Then it will be too expensive.
Well, you're on the right path, which is if you could be early on understanding, hey, they're trying to put several big ideas together, and right now the numbers don't look great. But once everything's put together, I believe the number is going to look great. then it's a good investment. Yeah. Because you'd be ahead of the curve. Once the numbers start looking good, a lot of people will pour in and invest in the company. Yeah.
Yeah, we'll see. I'll continue to research, and if I have more thoughts, I will post on the Discord.
Yeah, good idea. And I would also I would look at a couple of their peer companies, if anything, just to see if you're picking up some trends that like all these companies share these trends. And see, and you might run into a better idea, which is, oh, Brucker's okay, but this other company I found is even better because they are ahead in the field. They're doing better. They have a better margin. They have better this, better that. I think that might be a good stock to own. So that's where I would go with it. For the last month, they haven't been doing great. I wonder why. When did they announce? November 5th. So they just announced.
Yeah, and the announcement wasn't great. There was no roses and whistles in their announcement. It was kind of a meh.
Yeah.
But the way that I see it, they're preparing for the future. You see, that's what I was saying. And you actually were saying, if the big pharma are, or the science and so on, they are not spending, then it means that there is less business to this broker. But once they will start to spend, and again, I looked into the company, they are sending like big item, like their products are millions of dollars or hundreds of thousands at least.
You know, what's interesting is completely, different industry, but I think similar model. If you recall, ASML announced their earnings like 3-4 weeks ago, and semiconductors booming, like going off the charts, right? NVIDIA, Broadcom, and ASML came out and said, we're having a tough time selling these big machines that make semiconductors. And it left everybody scratching their heads like, wait, why are we seeing extreme demand on the semiconductor side? And then they have to buy machines to make the semiconductors. And the manufacturer of the machines, ASML, the market leader, really got sold off because they're like, we have a bad forecast. We're not going to sell as much as we'd like. So that one, I was like, wow, what a surprise. And if you recall, that really drove down the market. Now, let's remove ourselves from that example. Now we're dealing with, here's a company that's different but similar kind of model where they sell into other companies that use their technologies and their instruments to then produce the end product, which is scientific based products. But they're not doing all that great, right? These guys aren't doing great. So I think it's worth, exploring it and then seeing at what point are these guys going to start to rise and their stocks going to start to really work. Over the last 5 years, they had a couple of rallies, but I like seeing, obviously, I think everybody does. Like we saw the chart for the company TransDigm, right? This is a nice chart up and to the right. So what they're doing, the market likes it, the market buys it, market keeps buying it. This chart is up, down, up, down, up, down. So the market's not convinced. And I think when we looked at the numbers, like the cash flow is going up a little bit, then down, up a little bit, then down. So yeah, I think if you research it and potentially get in early, you would be in a good position. I would just caution you that you should really, really do your homework because this stock could really just kind of go nowhere, kind of go sideways. And I would hate for that to happen for you. So thanks for bringing it up. Good idea.
Yeah, fortunately, I bought a few pieces, but just recently. So I'm in more or less, that's my cost basis, more or less, maybe $1 or $2 more.
Okay. Sounds good. Thanks for the really good idea.
We'll see.
All right. So let's take a look at a Chinese stock. And as we enter Chinese stocks, let me just kind of provide a comment on China. So there will be tension between the US and China. These are the two economic powers of the time, right? And I think the tension will exist between US economy and China economy. They will work it out. I'm sure it'll receive plenty of attention and move the market. But where I see the opportunity for China is for the rest of the world. Take US out of the picture. China, like you were saying, Nkiter, Chinese EVs are being sold in Israel. They're being sold in Latin America. They're being sold in other parts of Asia. They're being sold all over the world. So China doesn't have to to be successful, China just needs to do a great job around the world. And if the U.S. economy doesn't buy as much Chinese goods, that could be somewhat neutralized with high growth in other areas. So I think that the Chinese companies can do quite well. Sentiment-wise, we'll see if they really start to grow really well. It might change sentiment, and then investors would realize, hey, it doesn't matter that the U.S. and China are really challenging each other and really making a lot of sensational comments, which I expect are going to come. What matters to investors is, hey, China is really booming in many markets around the world, and their companies are growing their revenues really well. They're growing their profits. It's the China economy is really booming. If that happens, China companies are going to do well. We will see. NetEase is an industry that I like. Online games, music streaming, learning services. I think somebody said it competes with Chegg earlier in the call. You're absolutely right. Internet content services, which is like Google. So those are businesses that are really desirable. I do own NetEase stock. I own a little bit. And so let's look at some of their fundamentals. So if you took all of this and said, oh, and they're located in the United States. Okay. the PE would be 30, 40. But instead, it's located in China. Okay. PE of 12.48. Very, very low. Forward P of 10, very low. They pay dividend. Just strong buy. The fundamentals are strong. So when we look at their fundamentals, they've been growing quite well. This isn't the Chinese yuan. I believe it's 0.14 is the conversion. So when we take this number, 106 billion, and convert it, so that's about 15 billion in revenue. That's a pretty good sized company. $15 billion in revenue, top line. Very good. And they're growing it. Very good. Okay, gross profit, 66. Let me see if I can get a percentage. So margin, gross profit margin, 62%. Very good. It's not quite as good as like Google Alphabet, but it's good. Free cash flow is 36 billion yuan. So I'll just keep it there. 36 divided by, what's their market cap? Oh, no, I can't. So 5 billion in free cash flow, and their market cap is 50 billion. So they're doing about 10% free cash flow yield. That's very good. So the fundamentals look great. What's holding back the stock is sentiment toward Chinese stocks. Over the last 5 years, it's just up 28%. Over the last year, it's down 31%. So if these guys keep growing, I'm going to keep buying because there's just too much value here. Fundamentals are good. They keep growing their business. Cash flow is good. I think their balance sheet's good. Let's take a look. I'll just show you my valuation in a second, but total cash and short-term investments. This is in the yuan, 122.8 billion yuan. And debt is really low. So they have lots of cash, very little debt. So it's, again, if you put this company in the United States, this thing would be worth 500 billion, excuse me. So this is a good company, very good company. And I have a valuation for it. And I have it really highly discounted. There's just a lot of value in those numbers. So that's my opinion on NetEase, and it's not fundamentals based, and I have a high discount rate on these numbers. It's a matter that, hey, when will the investing world start investing in China again? If that happens, NetEase is going to do great. If that doesn't happen, I don't know that they're going to do great. I think they're going to hold their value well, especially if they keep growing. And the Chinese economy is supposed to start growing faster than the U.S. And if that happens, and let's say this 8% growth turns into 12% or 15% growth, wow, this stock's really going to catch attention. So let's see how things play out. What do you think, Tomas?
I think it's a buy, I'm planning for the long run, so I'm not planning to change anything in 10 years if I buy this stock today. So
I'm glad you think along those lines. I think if I look at the world and say in 10 years, I think China's going to be, the economy is going to be bigger than the United States. China keeps getting more powerful from an economic perspective. Their EVs are, from what I'm reading, their EVs are very good. They're electric vehicles. I'm sitting in front of technology, monitors, a server, all kinds of hardware that's made in China. My phone's made in China. My desk is made in China. It's like everything's made in China. So the skill and ability to manufacture, China has great skill and ability. So I think that makes them a power in the world, and that is desired to be a partner with, so that they can manufacture the goods and that, whichever country is going to need, whether they're in Africa, Latin America, Europe, wherever, Asia, wherever they're at. China is a critical partner to all those countries. So I would say in 10 years, Chinese stocks are going to be worth a lot. The numbers are just too big to ignore.
thanks, Victor.
Yeah, you're welcome. Thanks for bringing it up. All right, new holdings. This one's exciting. This one might be right up my alley. I just wish it was a smaller cap, but that's what happens when these companies are successful. They go up in value. So let's take a look. So New Holdings provides digital banking in Brazil, Mexico, Colombia, Cayman Islands, Germany, Argentina, the US, and Uruguay. It offers spending solutions, prepaid cards, a digital enabled card that acts as a credit and prepaid card. Okay. So this is a regional bank. It's a new generation bank. And let's take a look at how they're growing and so forth. Whoa, Bitcoin is up. All right, good to hear. So in the last year, this stock is working. Look at that. See, these are the charts that I like, up and to the right. Now, it did have this really nice sell-off. Woo. But in general, the news we got last week is good news for New Holdings. Lower interest rates, higher growing economies. All those things are going to pump more transactions through New Holdings, get more assets and deposits into New Holding account holders. I think they're in a region that has very good growth. I can speak about Mexico, because I've been kind of tracking that for a while. But in the business that I'm in, I also have come across people in Colombia that are in my industry. Colombia, from what they tell me, is doing well. So they're in Brazil. Brazil's, I think, the biggest in South America. So those things look good to me. Interesting. It's a pretty good market cap, 73 billion. Revenue is 5 billion. So they are, if you look at sales to market cap, you're paying 14 times revenue for the company. The PE is a little bit high, 48, 34 is next year. Let's see if their growth is really high, and therefore you justify that PE. It's fairly priced according to analysts. All right. Growth. Wow, look at that growth. That is crazy. That's crazy good. Not crazy bad, which is not good. This is excellent. 86%. Quarterly, 76%. Great job. When did they announce? They're gonna announce this week. Oh man, mark your calendars. I'm gonna write that down. So they're gonna announce this week. They're growing really, really well. Very good. Okay. Now this is a bank, so I can't price them using free cash flows. It's just not the right method. I'm going to use earnings per share, and I want to look at their book value. And I think it's going to show it to me on the balance sheet. So book value. So book value per share. Very, very, very good. They went from 27 cents of book value per share to $1.45. You want this to go up. If you saw JP Morgan, you would see small rises, and they've been really just going up in value. You look at Citigroup, small rises in booking value, and that's been going up. These guys are leaping up. These are very, very good numbers. So I like what I'm seeing. Okay, so we've got great book value. 8 analysts cover it. And they are saying it's fairly priced. Okay. Now, does anybody know, how's the Brazilian economy? Is it growing? Is it doing well? Is it doing bad? Anybody know?
I don't know a lot, but Brazilian economy is always commented here in Argentina because of our close relationships regarding commerce. And for the economy is not doing, it's doing okay, but there is turmoil because of the president, and he's kind of left leaning, and that is affecting trust. But the economy is working fine. It's not like they are collapsing or anything.
Okay. Well, the forecast on earnings per share looks really good. Really high growth of earnings per share. So, I mean, New Holdings looks very interesting. Yeah, I think this is I think, Brad, did you ask about it, or was it Tomas that asked about this? This is doing really well, and I think it's going to continue to do well. So the other company that I was an investor in, and I did okay with it, was StoneCo. They're more of a payment processor. And wow, man, they came down. Small cap. You can see like back here, they were just really on a tear. I ended up getting out like around here. So I made money, but can't say that it was great return. It was a good return. They continue to grow, but their growth is really slowing. Quarterly. Yeah, they're quarterly slowing. So things are slowing down for them. And StoneCo is a small cap. I think that New Holdings is probably comparable to SoFi. SoFi is growing really fast. It's overpriced according to analysts. So over the 1 year, it's up 75%. 5 years, just up at 18%. And it's really moved up, man. Moved from like $6.30 on August 7th to more than double. Incredible. And these guys are growing. What's their growth rate? They're growing nicely, but not as fast as New Holdings. Their market cap is $14 billion. This is mainly US based, but their growth isn't all that great. Let's look at their book value. Book value, it was negative, and then it got into the fives. And it hasn't moved a whole lot. You see, you can see a small rise over 3 years. Went from 529 to the trailing 12 months. It's at 565. So just a subtle change. It's not as good as New Holdings. New Holdings, man, that book value is just booming. So this one's not as strong. I've never been overly impressed with SoFi, but I am impressed with New Holdings. And I think that if South America is going to benefit, like the US is going to benefit from lower rates, lower regulation, banks are going to thrive in the US. Maybe the same thing is going to happen for these guys. If they keep growing at these rates, they're going to be a big, big bank. So New Holdings looks great. I'd have to like dive deeper because I have to look at the book value, and then I do some other valuation approaches. To give you an example of what I do, I'll show you Citigroup. You'll see that it's very, very different than. So you see, it's not based on free cash flows. I'm going to base it on earnings per share, and I have to look at their financials for like the last 6-7 years, and then look at a trend that, put it into a forecast, and then be able to project what the book value is going to be in the future, and then discount it. So it does take some time, and I'll be doing that for New Holdings, and I'll probably record a video so you guys can see it. All right, good stuff. Thanks for the suggestions on the stocks. I think, all right, look at that. $80,617 per coin. Wow. Go Bitcoin. So the 1 year, this one doesn't do a great job there. Let's go here. So over 1 year, the Bitcoin is up 115%. Over 5 years, 847%. Wow, that's great. So when I talk about these elections, right, we had one just recently. We had it on November 4th, right around there. So obviously it's done well because it's gone from, here it is. So from this point on, it's up 18% since we just had this election. But if we look in the past, if we look at the 2020 election, which was right around here, and then it rallied, and it rallied up 312%. That's a really good rally. So it went from, we'll call it $18,000 per coin up to 60,000. Wow. So if it rallies up, maybe it rallies up 50%. I don't know. The number keeps getting bigger, so it's harder to grow substantially. And that's incredible growth. And then you look at previous to that, 2016. So that was 2020. I mean, it took longer, but it really, and that's not really, that's over a year, it went up 2,600%. So that one doesn't tell us a whole lot, but it still went up. So we'll see how high Bitcoin goes. I think what this tells you, and gold I think has been moving, is there's going to be more inflation in the future because tariffs will cause inflation. A booming economy will drive inflation because there'll be some scarcity in certain markets. Commodity prices, metals, I think we've analyzed metal companies and miners. Their commodity prices are going to do better. So those companies are going to do well. I think TX had a pretty good week. These guys mine and make steel. And they announced, and I think they announced and the election happened and they rallied nicely. And then they gave up some of those gains. It's still up. But I think if we have the ingredients to a booming economy, commodity prices are going to do well. So it'd be a good idea to keep an eye on these material companies, miners, copper miners, steel miners, or iron ore miners. That might be a good idea. And they pay nice dividends too. So that might be a good place to look for some value. All right, cool. So, well, thanks, Brad, for making me aware we are going to trade tomorrow. I was on the wrong page there. So I'm glad I'm on the right page. I don't have to work tomorrow. So I just expected everything's going to be closed. So I could watch my stocks, probably do a couple things for fun, and then watch the market close. I'll probably stream tomorrow after the market closes, and we'll see if you guys can join me or not. But everybody, thanks for joining this session. It was a really good one. And I hope you guys have a nice week. Hopefully it keeps going up like it did last week. Just a quick note. Next weekend, I'm traveling with my wife, and we'll be having a lot of fun, but on the road. So I cannot attend any meetings on the weekends. So we'll reconvene in 2 weeks, and we'll have this call in 2 weeks. And I'm not sure if I'm going to be able to have the investor workshop in 2 weeks. For sure, next weekend, I can't do any calls. But I'll try to stream where I can. And just reach out to me on Discord if you need anything, or email, and we will communicate. Maybe get on a one-on-one call if you would like to get on one. So, all right, guys. Well, it was very nice talking with you. Everybody have a good one. Enjoy your weekend.
Hey, you too. Thank you.
All right. Take care.
Thank you.
Thank
Bye-bye.
you.
See you guys.